In January 2021, a short squeeze of the stock of the American video game retailer Gamestop and other securities took place, causing major financial consequences for certain hedge funds and large losses for short sellers. Approximately 140% of GameStop's public float had been sold short, and the rush to buy shares to cover those positions as the price rose caused it to rise even further. The short squeeze was initially and primarily triggered by users of the subreddit r/Wall Street Bets, an internet forum on the social news website Reddit, although a number of hedge funds also participated. At its height, on January 28, the short squeeze caused the retailer's stock price to reach a pre-market value of over $500 per share, nearly 30 times the $17.25 valuation at the beginning of the month. The price of many other heavily shorted securities also increased. On January 28, some brokerages, including Robinhood, halted the buying of GameStop and other securities, citing the next day their inability to post sufficient collateral at clearing houses to execute their clients' orders. This decision attracted criticism and accusations of market manipulation from prominent politicians and business people from across the political spectrum. Dozens of class action lawsuits have been filed against Robinhood in U.S. courts, and the U.S. House Committee on Financial Services held a congressional hearing on the incident. In reaction to brokerages halting the buying of GameStop and other securities, the total market capitalization of cryptocurrencies and metal futures increased as well. Short selling is a finance practice in which an investor, known as the short seller, borrows shares and immediately sells them, hoping to buy them back later, where the investor's loss is limited to the cost of their initial investment. Short sellers are exposed to a risk of short squeezing, which occurs when the shorted stock jumps in value due, for instance, to a sudden piece of favorable news. Short sellers are then forced to buy back the stock they had initially sold, in an effort to keep their losses from mounting. Purchasing the stock to cover their short positions raises the price of the shorted stock, thus triggering more short sellers to cover their positions by buying the stock. This can result in a cascade of stock purchasers and an even bigger jump of the share price. GameStop, an American chain of brick-and-mortar video game stores, had struggled in recent years due to competition from digital distribution services, as well as the economic effects of the COVID-19 pandemic, which reduced the number of people who shopped in person. As a result, GameStop's stock price declined, leading many institutional investors to short sell the stock. On January 22, 2021, approximately 140% of GameStop's public float had been sold short, meaning some shorted shares had been re-lent and shorted again. Analysts at Goldman Sachs later noted that short interest exceeding 100% of a company's public had only occurred 15 times in the prior 10 years. However, in September 2020, Ryan Cohen revealed a significant investment in GameStop and joined the company's board, leading some to believe that the stock was undervalued. Similarly, investor Michael Burry acquired a 3.3% stake in GameStop in mid-2019. The subreddit r/Wall Street Bets is an online community on Reddit, a social news website. The community is known for discussion around high-risk stock transactions. Observers congregating around r/Wall Street Bets believed the company was being significantly undervalued, and with such a large amount of the shares being short they could trigger a short squeeze by driving up the price to the point where short sellers had to capitulate and cover their positions at large losses. I'll post the update tomorrow as I always do after data readouts. It will be ugly, and everyone will mock me as usual. But I expect GME to bounce back just as it did after the two previous earnings readouts. Keith Gill, r/Wall Street Bets. January 2020. Even before the short squeeze, there had been interest in GameStop. Keith Gill, known by the Reddit username, Deep Fucking Value, and the YouTube and Twitter alias, Roaring Kitty, purchased around $53,000 in call options on GameStop stock in 2019 and saw his position rise to a Value of $48 million by January 27, 2021. Gill, a 34-year-old marketing professional and chartered financial analyst from Massachusetts, stated that he began investing in Gamestop during the summer of 2019. After believing the stock to be undervalued, he shared information regarding his investment on our Wall Street Bets, providing regular updates on the investment's performance, including times when the investment had plunged. He stated on January 29, 2021, after the GameStop short squeeze, that he thought this trade would be successful, but never expected what happened over the last week, adding that he planned to continue his YouTube channel